Imagine this. Just last month in January, silver exploded past $100 an ounce for the first time ever, hitting wild highs like 121, and everyone was buzzing about it being the ultimate safe haven in this crazy economy. Investors were piling in, thinking this rally would never end, with prices surging over 60% in just 1 month. But then bam, on January 30th, it all came crashing down. Silver plunged over 30% in a single day. The worst drop since 1980, wiping out billions and leaving traders stunned. If you're thinking about jumping into silver right now in February, hold on, and make a move until you hear what really happened and why this could be a trap. This isn't just market noise. It's a warning sign that could save you from getting burned. Stick with me here, because what unfolded in January exposes some serious cracks in the silver market that most people are missing. And if you appreciate breakdowns like this that cut through the hype, hit that like button and subscribe to stay ahead. I am talking real insights from elite Capital Decoded that help you make smarter moves without the panic. Let's rewind a bit. Silver started January around 70 to 80 bucks, but by mid-month it was rocketing up, fueled by everything from geopolitical tensions like those U.S. carrier moves toward Iran to massive industrial demand from solar panels, EVs, and electronics. China was buying like crazy, and with the dollar weakening earlier, silver felt unstoppable. Analysts were calling it gold on steroids, predicting it could hit 150 soon. Prices crossed 100 for the first time, then kept climbing to over 120, drawing in retail investors, hedge funds, you name it. It was like a feeding frenzy, with silver outperforming gold big time, up massively from last year. But here's where it gets interesting. This wasn't just organic growth. There were whispers of a squeeze, with physical silver trading way above paper prices, showing real supply shortages. Vaults were emptying, dealers halting sales. It felt like the start of something historic. Then came the twist. On January 30th, President Trump nominated Kevin Warsh for Fed chair, and suddenly, fears about the central bank's independence eased. The dollar surged, and precious metals got hammered. Silver futures tanked over 30% to settle around $78.50, while spot prices dropped sharply too. Gold tumbled as well, but silver got hit harder because it's thinner, more volatile, and loaded with leverage. Stops got triggered, margin calls poured in, and fast money fled. It was emotional whiplash celebration one day, chaos the next. And get this, even after that bloodbath, silver prices have been volatile, closing recently around 80 to 85 in spots. Still way up from December, but the damage was done. Billions vanished in minutes. And now, heading into February, the market's reeling with prices dipping further today. So why the warning? Don't buy silver in February until you understand this isn't over. First off, big banks like JPMorgan are sounding the alarm. Their former chief strategist Marko Kolanovic is predicting silver crashes back to 50 bucks later this year. That's half its recent levels. He says the rally was overblown, driven by excessive confidence and speculative mania, not pure fundamentals, and now we're in correction mode. Other forecasts are mixed. Some see a February pause, holding key supports, then maybe a surge later, but others warn of more pain, especially with the CME hiking margins starting early February up significantly for silver, forcing liquidations and killing momentum. That's not just risk control. It's like changing the rules mid-game to unwind crowded trades. Think about it like this. Silver's always been the emotional sibling to gold. It exaggerates moves up and down. January's run invited everyone in, but the crash shook out the weak hands. Now, in February, we're seeing hesitation. Prices are consolidating around major levels from last month. But with volatility spiking, any wrong move could trigger another drop. Geopolitics aren't helping. Trump's tariffs and potential military actions keep things tense. But if the dollar stays strong or inflation data surprises, silver could test lower supports like 75 or even lower. Industrial demand is still there. Sure, solar and EVs need silver like never before, but supply deficits projected for later might not save it short term if speculators bail. Here's the real exposure from January. It showed how manipulated this market can feel. When physical premiums spike and exchanges jack up margins overnight, it's a red flag for retail investors. We've seen this before: sharp rallies followed by brutal pullbacks that reset the board. But the fundamentals haven't changed. Debt's massive, trust in fiat is shaky, and silver's role in green tech is growing. So is this a healthy reset or the start of a bigger unwind? If you're leveraged or chasing highs, February could hurt. But for patient holders, this dip might be a buying opportunity once the dust settles. Let me share a quick story to make this stick. I talked to a friend who's been in metals for years. He loaded up in early January, rode the wave to over 110, then watched a huge chunk evaporate in one session. He didn't panic sell. Instead, he waited for clarity. That's the key. Markets punish emotion. January exposed that when silver gets too hot, too fast, it cools off aggressively. February's setup with those margin hikes and bearish calls screams caution. Wait for signs like holding key averages or fresh buying from China before diving in. As we wrap this up, remember, understanding these moves is what sets smart investors apart. If this helped you see January's chaos in a new light and why February demands patience, drop a comment below. Do you think silver bounces hard this month or tests lower like some warn? Your thoughts could spark great discussions. And if someone's still hyped on buying now, share this video, it might save them some regret. Stay curious, stay calm, and we'll decode more soon. Thanks for watching.